This is a full year EMP501 submission using the new EasyFile version 8, but done manually. We'll use certificate history to save time, but everything else, updates, additions, and reconciliation happens right here inside EasyFile. Version 8 may look cleaner, but under the hood, it comes with new traps. In this video, you'll learn how to retrieve certificate history, capture and fix manual entries, reconcile your EMP501, and submit it successfully to SARS. Let's get into it. If you're starting a manual EMP501 submission in EasyFile version 8, or what SARS now calls the Fin client system, this is where your journey begins. A clean consolidated spreadsheet showing income and deductions for each employee. Now a quick heads up, all the names you'll see here are fake, just for this demo. So no, you won't find your cousin Sipo on this list. Each row represents an employee. Each column a breakdown of totals for the full year. Gross income, pay as you earn, SDL, UIF, with their SARS codes just below the headers. I always include the SARS codes directly under the column names when I'm knee-deep in manual certificates. This little trick saves me a ton of time. What you are looking at is the consolidated view consisting of totals from two time frames, March to August, already submitted in the first EMP501, and September to February, captured now for the second period. And this workbook, it's your best friend, the foundation, the heartbeat of your submission. You'll see me reference it often throughout this video because everything, and I mean everything, flows from here. So don't jump into EasyFile just yet and start capturing certificates like a data entry ninja. Make sure you have a spreadsheet like this, accurate, complete, and easy to follow. And before we punch numbers into EasyFile, we need to do some checks, because entering dodgy data, that's how you end up with errors and SARS giving you endless issues. Let's rewind and look at how these totals were built, the actual period breakdowns behind the numbers. Now I'm in the March to August sheet, and here's something that might seem small, but it's a game changer when you're reconciling manually. Every employee stays on the same row across all spreadsheets. Sipo Dlamini, always in row 5. His gross income, that's in B5. His pay as you earn, C5. SDL, D5. And UIF, including both employee and employer contributions, is right there in E5. Same goes for every other employee. Their details stay in the exact same row and column across every sheet. And here's why that matters. Because the layout is consistent, I can copy a sum formula across all spreadsheets and it'll always pull the correct value. No manual adjustments, no double checking cell ranges, just fast, clean totals with zero fuss. That kind of structure is what keeps this whole process easy, quick, and precise. And right at the bottom, you'll see the totals row. Gross pay as you earn, SDL, and UIF, all neatly summed up. We'll come back to these totals when we compare them to what SARS has on record, but first, let's move to the second period, September to February. All employee names line up. All the figures are entered, and even employees who left during the first 6 months still appear, just with empty values. They placeholders that help maintain structure and ensure my formulas stay intact. Now take a look at the bottom. You'll see a row labeled per EMP501. These are the totals pulled directly from the SARS EMP501 statement of account. What I've done here is take the full SARS statement of account for the tax year and distilled it into this clean, organized table, month by month, with pay-as-you-earn, SDL, UIF, and penalties laid out for easy comparison. This is the external proof that must match your certificate data, because if your certificate totals don't align with what SARS already has on record, well, let's just say reconciliation becomes a nightmare. Up next, I'll show you exactly how to get this EMP501 statement from efiling and turn it into something usable. If you already know how to do that, feel free to skip ahead. From my internet browser, I simply search for SARS efiling and follow the official link. Then, enter your username. Enter your password. Click Log On. Once inside, I search for the employer using the first few characters of the name. In my case, the first 3 are enough. When the taxpayer's name, company, and income tax number appear, I want a full view, so I click on View Taxpayer. Next, over on the left-hand menu, click SARS Correspondence. Scroll down and select Request Pay-as-you-earn Notices. Now choose the tax year. For the 2025-02 EMP501 submission, that's the 2025 tax year. Click Continue. Double check the period range. Start period March 2024. End period February 2025. If those are correct, hit Submit. Once it's generated, you can click to view the statement of account. I scroll through it and pause on the first period where the pay-as-you-earn SDL and UIF declarations are visible. You'll notice the format here is almost identical to how I've structured my spreadsheet, and that's no accident. Mimicking this layout makes it easier to capture values without confusion. You'll see 2024-03 through 2024-07 on the first page. 2024-08 continues on the second page. From there, the remaining months have fewer transactions and are simpler to summarize. The final period shown is 2025-02, which is all we need. I don't worry about the rest of the document. I just save it to downloads, give it a file name I'll recognize, and once I'm happy, everything is in order, I hit Close and exit e-filing. Cross-checking the spreadsheet summary. What you're seeing now is my spreadsheet summary of the SARS EMP501 statement of account. And let's do a bit of work to show you how everything ties together. Let's start with the September 2024 to February 2025 period. First, look at the pay-as-you-earn total. When I highlight those monthly pay-as-you-earn amounts, the sum at the bottom right shows exactly 32,123, and that matches perfectly with my employee analysis above. Same goes for SDL. Highlight the SDL amount, and the total shows 7,261.08, which once again agrees with the employee breakdown. Finally, let's do UIF. Highlight the UIF values for the same period, and you'll see 14,522.16, the same totals shown in the employee analysis. I've already double-checked the first 6 months, and everything lines up there too. The final year-end totals, which is the cross-check that matters. Now let's walk through the consolidated workbook totals for the full tax year and compare them to the EMP501 summary. And if you're wondering about all the different check rows at the bottom, don't panic. They're not errors or duplicates. They're part of my triple check system to make absolutely sure the numbers are rock solid. The first check row adds up the pay-as-you-earn, SDL, and UIF totals from each individual period, September to February and March to August. The next total is from this consolidated sheet, pulling figures directly from the employee data above. And finally, the per EMP501 row brings in the official numbers from the SARS EMP501 statement of account. Now here's the magic. Take a look at the pay-as-you-earn column. The final number, 61,165.75, matches across every check, from the individual monthly sheets to this consolidated total page, and all the way back to the official SARS EMP501 statement. Solid agreement, end to end. Next, let's look at SDL. The total from the EMP501 summary is 15,856.67, and you'll see the number echoed perfectly in the employee analysis for both periods and right here in the consolidated sheet. And finally, we get to the UIF. Once again, 31,713.34. Exactly the same across the two separate periods combined, the employee summary and the EMP501 totals. Everything lines up, every amount is checked, confirmed and reconciled. For now, just make a mental note of the penalties amount. We'll revisit those later when we tackle the reconciliation phase, because those figures have a story of their own. Employee analysis overview. Here we zoomed in on the employee level analysis, and at this point, everything is laid out clearly. Every name, gross earning, pay-as-you-earn, SDL, UIF, and final calculated code like 4149 is visible, all based on the consolidated totals we've just verified. This table gives you a clear snapshot of how each employee contributes to the overall totals and helps spot anomalies before capturing certificates. Your own spreadsheet might include more columns depending on which income and deductions codes you're working with, and that's perfectly fine. What matters is that your layout is clear, consistent and ready for what you need to capture in EasyFile. Nothing more to tweak here. The data is clean, the structure is consistent, and we're ready to move forward. Just a quick final comment before we jump into capturing certificates. Below the gross income, pay-as-you-earn, SDL, and UIF totals, you'll notice a set of codes. To make sense of those, I've created a glossary page. This is where I keep all the relevant SARS source codes and their descriptions. These are the exact codes you'll need when entering income and deduction values on each employee's certificate. I've also added the SIC code for the business year. Why? Because scrolling through that endless SIC list in EasyFile every time you open a certificate is no one's idea of fun. One last word on these codes and this spreadsheet in general. Having it on hand saves loads of time during data entry. It keeps you focused and helps prevent mistakes when selecting the right source codes and entering the correct amounts in each employee's certificate. You'll see just how central this spreadsheet becomes as we step into the EasyFile workflow. When EasyFile doesn't go according to plan. So let's open EasyFile on my desktop and get started. You'll see the thin client splash screen appear first, followed by the usual checking for updates and loading messages. At the welcome screen, I log in with my EasyFile username and password. Now, because this is a first-time EMP501 submission for this company, the employer is not on the employer list to select yet, so I hit continue. Here's a little trick I've learned over time. If you want to get a flying start on manual certificate capturing, The fastest way is to retrieve the certificate history from a previously submitted period. That way, you don't have to create a new employer manually. You just click the Retrieve Certificate History button and off you go. But now something very interesting and very humbling is about to happen. And I hope I have your full attention, because I'm about to show you a real mistake I made, one that came back to bite me. I debated whether to include this in the video, but I decided to keep it in anyway. Why? Because it's the kind of mistake that anyone can make. And more importantly, I want to show you that even when things go wrong in EasyFile, there is a way to recover, reset, and move forward. My original plan? Restore the backup from 2024-08. That would have been the latest submission for this client, still within the 2025-02 year, which means fewer new employees to worry about. Simple, logic, efficient. So I go ahead and select the backup file. And this is where things start to unravel. There it is, the backup from the 2024-08 submission. But then I see the date, 14 October 2024. Now that's weird. The EMP501 deadline was 31st of October, and I usually make continuous backups. But the 14th of October doesn't feel right. I typically make the final backup much closer to the deadline. That's when it hit me. The PC I used for those submissions was wiped, completely reset. And the backup? Yeah, I had saved it on the C drive and never backed it up anywhere else. My heart sank. At this point, I can only hope that the 14th of October file contains what I need. So I proceed. Log in using the backup file credentials. Enter the PAYE reference number. Select the last submitted period, 2024-08, and hit Request Certificate Data. The captured PAYE reference number and the period of reconciliation is not available in the selected backup file. Oof, that message hit me like a brick. For a second, I'll be honest, I panicked. This was the exact scenario I warn against in all my videos. Always make a backup. Always store it safely. Did I follow my own advice? Nope. Guilty as charged. But here's the thing. Not all is lost. Yes, I've got more work ahead of me. Yes, it was a mistake, but it's not game over. Let me show you exactly how I turned this setback around and how you can recover too, if this ever happens to you. Recovery mode. Let's try plan B. Alright, time to regroup. I'm back on the dashboard. And yes, I'm still using the same backup file. This time though, I'm switching up the approach. I log in again using the backups, EasyFile credentials. Type in the employer's PAYE reference number. And now, instead of trying to retrieve the 2024-08 period, I go one step back to 2024-02, last year's EMP501 submission. Now, logic tells me this period should still be covered in that backup, but there's only one way to know for sure. I click Request Certificate Data, and while it's loading, I say a little prayer. And success. Certificate history successfully retrieved. Honestly, I almost high-fived my screen. This is a win, and not just a small one, because now the employer has been created in EasyFile. I can go to the list of employers, select my employer, and when I open the period list, there it is, a green tick next to 2024-02. That tick means certificates are present for that period and we're back in business. Next, I head to the Employee Admin section on the left-hand menu. And just like that, I can see the employees. But here's a quick trick for you, especially if you're dealing with larger employers. By default, EasyFile only shows 20 employees per page, but you can increase that by clicking on rows per page at the bottom and selecting a higher number, even up to 100 employees per page. I'm choosing 50 for now, and as I scroll, yep, there they are, all the employee names from the 2024-02 period, fully restored. Plan A failed, but Plan B came through like a champ. Update employer details and avoid submission failure. When you retrieve certificate history in EasyFile, the employer's basic information is always imported and saves a lot of time. But not all the required fields come through, and that's a problem. To avoid hiccups later during the EMP501 submission, I always recommend heading straight to the employer admin section on the left-hand menu. There, under Edit Employer, you'll find everything SARS expects, and you can fill in any missing pieces. Now, the first section, Employer Information, looks complete. All the fields are filled out. Everything seems fine. But then I want to show you this. An actual email I received asking for help with a failed submission. Let's take a closer look at the image of that submission error. You'll see two error messages related to the SEC code 2083 ZAR. 1. Employer SEC code 2083 is invalid. 2. If transaction year is 2020 or later, this field must not be completed. So where does this come from? This is a legacy data issue. Outdated or invalid SEC code information was pulled through during the certificate history retrieval. The EasyFile system brought in data that should no longer be there, and SARS doesn't like that. Here's how to fix it, or better yet, prevent it altogether. Under the SEC code drop-down in the Employer Admin section, scroll to the very top and select Please Select. That simple move clears the field and keeps your submission from crashing at the final step. It's quick, it's easy, and it saves you from one of the most frustrating errors I've seen in this process. Final touches to the employer information. I'm skipping past the business address section. That's usually fine unless something specific is missing. But from experience, I know that the contact person's details need to be fully completed. Otherwise, EasyFile will flag it during submission. I notice the first name field is empty, so I go ahead and fill that in. Cell number, email address, and finally, the position at the business. Now I click Update Employer. And here's a common moment of truth. If you've missed anything mandatory, EasyFile will throw an error, and sure enough, here we go. A field validation error pops up. Employer's physical address, country code 2081 is not completed, but mandatory. Alright, no problem, let's fix that. Okay, I head back to the business address section, and sure enough, the country code field is highlighted in red, just waiting for attention. I select the correct code, and with that being the only outstanding issue, I press Update Employer again. Success! The employer has now been updated successfully, and we're one step closer to completing this submission without drama. Copy employees from a previous period and save tons of time. One of the key differences in EasyFile version 8 is how it stores data. Unlike the old version 7, where employee details were stored centrally, version 8 links everything to a specific submission period. So to begin, I first select 2024-02 period at the top, then head over to Employee Admin on the sidebar. From here, I scroll down to view the list of employees. By default, EasyFile only shows 20 employees per page, but since I have more, I increased the setting to 50 rows per page for better visibility. Now to activate bulk actions, I slide the toggle next to employees selection. And that brings up two new buttons at the top. I'm interested in the duplicate employees button, but before clicking it, I carefully go through the list and select only the relevant employees. I cross-reference these names with the final consolidated spreadsheet we've prepared earlier. You'll notice that a few employees are not selected. That's because they were no longer employed during the 2025-02 period, the one we're submitting now. Once I've selected everyone who should be carried forward, I click Duplicate Employees, choose the new period 2025-02 and hit OK. EasyFile confirms. Selected employees have been duplicated. I press Proceed, and just like that, I'm switched to the 2025-02 period, and there they are. This shortcut is a lifesaver. Duplicating employees from a previous period means you don't have to retype their personal details manually, and for larger employers, it's a massive time saver. Before we start adding certificates, I've got a few employees on my list who are new this year. They weren't employed during the 2024-02 period, so I'll need to add them manually. Hopefully there aren't too many, because that part is more time consuming. And just to be clear, manual capturing employees and their tax certificates all the way through to submitting your EMP501 return is not my preferred method at all. It's far from ideal, but the reality is there are still people doing it this way. So let me show you how it works. Manually adding a new employee. From the dashboard, I head to Employee Admin and then straight to Add Employee. When you're adding a new employee in EasyFile, you'll need to complete 3 sections. 1. Employee information. 2. Employee contact details. 3. Employee banking details. Let's start with the first section, employee information. At the top, you'll find nature of person. And for this demo, I'm going to select option C, director of a private company or member of a closed corporation. Now, I want you to remember this choice because something important is going to happen with this certificate later. Here's a hint. Choosing C here will lead to a validation error down the line, but I'll show you exactly how and why that happens in just a bit. The rest of this section is what I call standard information, the kind of details you see on almost every official form these days. Surname, first 2 names, initials, date of birth, South African ID number, income tax reference number. Nothing complicated, just your basic identity information. Once all of that is completed, we move on to the next section, employee contact details. Just filling in the employee's contact and address details, the usual fields every form asks for. Nothing thrilling here, so let's fast forward and save energy for the good stuff. Now, before we get to the actual certificate, there's one last section to complete, the employee's banking details. Once that is done, and all 3 sections are completed, I press Save. Oops, EasyFile pops up with a gentle reminder. Business telephone number and postal address structure are still mandatory. Looks like I've skipped those. No problem. I scroll back to the employee contact details section, pop in the business telephone number, and head down to postal address type. From the drop-down I select same as residential, quick and simple. Now I press save again. Boom! Employee saved successfully. And EasyFile's next prompt: use the certificate screen to capture certificate details for this employee. Perfect. That's exactly what we're going to do next. Back at the top, and now I click on Add Certificate. It's go time. Capturing the certificate basics. We're now on the certificate detail screen, and EasyFile kicks things off by automatically assigning a certificate number for us. Next up, we choose the certificate type. In this case, it's an IRP5, not an IT3A. Then select the year of assessment. Since this employee is paid monthly, the pay period worked is 12, and the pay periods in the year of assessment is also 12. This employee doesn't qualify for ETI, so we leave that section blank. Now onto the certificate tax period. Start date, that's the first day of the tax year. End date, easy, 28 February 2025, the last day of the tax year, since this employee was employed for the full year. And don't forget this crucial field, the employee standard industry classification or SIC code. Luckily, I saved myself some admin by grabbing this during setup. It's 41,000, construction of buildings. With that, the first part of the certificate is complete. As I scroll to the bottom, the Save Certificate button comes into view, but we're not hitting that just yet. First, let's capture the part that really matters: income received and deductions. To capture income, scroll down until you see the Manage Source Codes button. Click that to begin. We'll start by adding code 3601. That's your normal salary income. Enter the value, then click Add Code. Now, don't just exit just yet. We're staying right here in the Manage Source Code screen to handle the rest. Since this employee has no other income items, I press 4 on the keyboard. A quick shortcut to jump straight to the deduction section. Scroll down and find code 4141. That's the UIF contribution. This is the combined value of the employee and employer portions. Enter the amount, click Add Code, and we're good. But wait, I realize I made a mistake with the UIF amount. No panic. Here's how you fix it. Click Add Code again. Select code 4141 a second time. Now instead of Add, you'll see the option to update source code. Enter the correct UI value. Click Update, and EasyFile asks if you're sure you want to overwrite the previous amount. I'm 100% sure, so I hit Yes. Now let's move on to the next deduction, Pay As You Earn, which is under code 4102. Enter the Pay As You Earn amount. Add it like before, and you're nearly done. But don't forget, if you're liable for SDL, that field is required too. You'll find SDL under code 4142. Enter the amount and click Add Code one last time. Now close the source code screen and we're back in the certificate view. Here you can review all the values captured under income and deductions. The only other section we'll touch is the tax credit and employer-employee contributions. Open the drop-down and compare these values to your original spreadsheet for accuracy. Everything looks solid, so I click Save Certificate and then Field Validation Error. Remember when I selected C, Director of a private company, under Nature of Person? Well, EasyFile doesn't accept that option for this certificate type. But here's the good news. Even though the certificate isn't technically valid yet, we can still save our progress. So I press back to employee and head to employee information, because the problem isn't in the certificate, it's in the master file data. Right there, in the first field, I change nature of person from C to A, individual with an ID or passport. I click update. But here's something important to understand. Updating the employee details does not automatically update the certificate. So back we go. Open the certificate again. Scroll to the bottom and hit save one more time. Now you'll see the status has changed from incomplete to created, which means the correction took effect and we're good to go. Let's head back to the dashboard. Next up, I'll show you how to add the certificate for an employee we duplicated from a previous period. Adding certificates for copied employees from historical certificates. Back on the dashboard, I head over to Employee Admin. Now this time, I'm not adding someone new. I'm working with an employee who was duplicated from a previous period. I find the employee on the list, click View, and we're in. From here, it's a familiar workflow, the same one we followed when adding an employee manually. Only difference, all three sections, employee information, contact details, and banking details, are already filled in from the previous period. But here's the thing, if you're not using a payroll system to keep the employee information up to date, what gets copied over might be a bit outdated. So before jumping into the certificate, I take a moment to double check the employee's details. In this case, the work address has changed, so I update it. The residential address and banking details, still good. No need to touch those. I hit save, and with the employee's information now updated, we're ready to move on. Time to add the certificate. On the certificate screen, the golden rule is this: complete every field that applies and leave the rest blank, only if they truly don't apply to your employee. Since this employee paid pay-as-you-earn, the certificate type is an IRP5. I'll show you how to handle an IT3A later in the video. Select the year of assessment. Then we get to the pay period fields. This employee was paid monthly and worked the full tax year. So, pay periods worked 12, pay periods in the year 12. But if this was a weekly or bi-weekly employee, those numbers would obviously change. Just adjust them to match how many times they were paid. Then, tax period start date. First day of the tax year. Tax period end date. Last day of the tax year, because the employee was still employed at year end. Those additional checkboxes not applicable here. Skip them. Scroll down and don't forget the employee SIC code. I've already secured it earlier, so that part's quick. That wraps up the first part of the certificate. Now we get to the heart of the certificate, the numbers. Open the income received and deductions section and scroll down until you see the Manage Source Codes button. We'll start with code 3601. That's your basic salary. Enter the amount, then click Add Code. Next up, deductions. Press 4 on your keyboard to jump straight to that section. We begin with code 4102, the pay-as-you-earn deducted from the employee. Enter the amount and click Add Code. Now for the UIF contribution. This is the combined value for both the employer and the employee. Interesting thing to note here, you can enter cents in this section, unlike the income section, which only accepts whole rands. Next, we capture the skills development levy. Use code 4142. Enter the amount under value and click Add Code again. Once all values are captured, go ahead and close the source codes window. Now here's a little habit of mine and I recommend it. Before saving, I like to open each section and double check what's been entered. Since the totals and codes aren't fully visible while you're working, this quick review helps catch anything that might have been missed. Income is showing as expected. Deductions and total deductions are blank. Under tax credits and employer-employee contributions, the values are displayed correctly. Everything looks good, so I hit Save Certificate. And now you'll see a new green box appear at the top of the screen, right next to where we originally clicked Add Certificate, showing the certificate number, the reconciliation period, the year of assessment, and the all-important status created. That means this certificate is complete and ready. If there was no pay-as-you-earn deducted, there's still a certificate that needs to be issued. Up to now, I've shown you how to add an IRP5 certificate. Now let me show you how to capture an IT3A. There's no big difference between the two, but knowing when to use each one is key. IRP5 certificates are for employers where pay-as-you-earn was deducted, and they need to be reconciled against all tax paid over to SARS. IT3 certificates are used when an employee earned below the tax threshold and no pay-as-you-earn was deducted. But you're still required to report their income, along with any deductions like UIF and SDL. Prepping the employee before the certificate. Back on the dashboard, I head to Employee Admin and click View next to the employee I want to update. We're dropped straight into the familiar three-part layout: employee information, contact details, and banking details. Now, because this employee was copied from the 2024-02 period, most of the information is already there. And in this case, the employee information section looks good. But I've noticed the residential address has changed, so I update that under contact details. And just to demonstrate, yes, you can save as you go. So I do that now. Then I get to the banking details, and they're blank. That's a no-go. Carrying on without banking details, that's like trying to submit a meal with no main course. It just won't fly, especially not with SARS. So I enter the banking information, making sure it's complete and correct. Now everything is in place. I hit save one more time. And with that, our employee is fully prepped and ready for their certificate. Time to capture the IT3A. Let's make it count. Now let's move on. It's time to capture the IT3A certificate for the year. Now we're back on familiar ground, but this time it's for an IT3A certificate. And just like with the IRP5, this section covers the most important fields. Certificate type. This time it's IT3A because there's no pay-as-you-earn involved. Year of assessment. Set that to match your current submission year. Pay periods worked. For this employee, it's 12, since they were employed all year. Pay periods in the year of assessment, also 12. Next, certificate tax period start. That's 1st of March 2024 in my case. Certificate tax period end, the last day of the tax year. And finally, don't forget this one, the employee's SIC code, which I've already looked up and noted earlier. Once those are in, the first part of the certificate is complete. No surprises, no stress. Let's carry on and wrap up the number section and open the income received and deduction section. Then scroll down until Manage Source Codes becomes visible. We begin with code 3601, basic salary. Enter the value, and as you can see, it's below the tax threshold of 95,750. That's exactly why this certificate qualifies as an IT3A. Click Add Code to lock it in. Next, since no pay-as-you-earn was deducted, we skip over code 4102. That one doesn't apply here. Instead, we move to code 4141, the UIF contribution, which includes both the employer and the employee portions. Enter the value, then hit Add Code. Now here's a quick quiz. Can you guess the next code in this simple IT3A setup? Yes, it's code 4142, the Skills Development Levy, or SDL. Add the value, click Add Code, and we're nearly there. But we're not done yet. There's one more code, and this is the one that defines an IT3A certificate. Code 4150, the reason this certificate exists. This is mandatory for every IT3A certificate, and skipping it will cause validation errors later. Once you select code 4150, a drop-down appears below the description. Click it, and you'll see a list of predefined reasons. I won't go into detail on all of them now. Feel free to pause the video and explore the options. But for this scenario, the correct choice is 2 earned less than the tax threshold. Select it, click Add Code, and then close the source codes box. Before saving, let's do a quick review. Income received is showing correctly. Tax credits and employer-employee contributions reflects the captured values. Everything looks in order. Now I open the certificate history tab just to give you a look at what this section contains before the certificate is saved. This is always available and gives you extra visibility into an employee's tax record within EasyFile. Done here, so I click Save Certificate. But hold on, we get a field validation error. Turns out I mistakenly entered 28 February 2024 as the end date, even though the start date is 1st of March 2024. Did you catch that earlier when I made the mistake while entering the certificate information? For now, I want to save the certificate as is, then go back to certificate details, update the end date to 28 February 2025, and save again. Let's have a look at the certificate details by clicking the green box of the certificate created. Under the certificate history, previously nothing was filled in, and now you'll see the full history of certificate source, manual capture, date created, certificate status created, previous status incomplete because of those early validation errors. If this certificate were ever cancelled, you'd also see a cancellation date here. Let's head back to the employee list and get ready to complete the next certificate. You don't need to watch me do this 12 times. By now you've seen how to add an IRP5 and an IT3A certificate step by step. So instead of dragging you through every single certificate, let's do this. I'll fast forward the process and only pause to show you moments that matter, errors, fixes, and little insights that could save you time or headaches. And when we're done, we'll regroup and review where things stand, with all the certificates captured and ready for reconciliation. As I save the certificate, I hit a field validation error. It's telling me that pay periods worked and pay periods in the year of assessment are mandatory. And yep, I missed them. Let's fix it quickly. Press OK to clear the message. Scroll back up to the certificate details section. Enter the pay periods worked, in this case 12. Enter the pay periods in the year of assessment, also 12. Scroll down and click Save. But once again, I hit a brick wall. This time, it's a field validation error about the employee account holder relationship. That info lives in the employee banking details, and right now it's missing. So here's what I do. First, I save my progress so far and press OK to clear the message. Then I head back to the employee contact details. And while I'm here, I take the opportunity to update the employee's residential address. Next, I open the banking details section and complete the missing fields, including the account holder relationship. With all that updated, I click Save, confirm with OK, and go back to the employee list. I find the same employee, press View, and now even though the address and banking info are up to date, the certificate still shows as incomplete. And that's because EasyFile follows a strict workflow. Changes to employee info won't reflect until you resave the certificate. So I open the certificate again, scroll to the bottom and hit Save. This time it works. And my favorite moment, that little green section at the top confirming certificate status created. From here I'll breeze through the rest, but stick with me because there are a few stumble blocks I ran into that you'll want to see. But then I stumbled on this one while trying to save another IT3A, and it's worth slowing down for a second to explain. The error reads, type of certificate 3015. If IT3A is indicated, code 4150 must have a value, and codes 4101, 4102, and 4115 must not be included. In plain English, if you're submitting an IT3A certificate, it must include code 4150. The reason this is an IT3A, and it must not include any of the pay-as-you-earn related codes like 4101, 4102, 4115, because no pay-as-you-earn was deducted. It also reminds you that code 4150 is mandatory. In other words, you need to tell SARS why this is an IT3A and leave out any codes that suggest pay-as-you-earn was involved. To fix this, head back into the income received and deduction section and open Manage Source Codes. In the Source Code field, search for code 4150, reason for IT3A. Once you've selected it, a drop-down appears just below. Choose the appropriate reason from the list. In this case, it's earned less than the tax threshold. Click Add Code. Then close the source code box. Now save the certificate again. And there it is, certificate successfully saved. No more errors. This time I came across something a little different. An employee without a tax number. From the dashboard, I went to Employee Admin, click View, and under Employee Information I spotted an issue. In the Income Tax Reference field, A string of 10 zeros, the classic hack we all used in the past to bypass the system when a tax number wasn't available. It used to work just fine, but on the new EasyFile, I'm not taking any chances. So here's what I did instead. Removed the 10 zeros from the income tax reference field. Head over to the IT registration section. Logged into SARS efiling. Copy the employee's real tax number. Paste it into the tax field in EasyFile. And finally, click Save to update the employee's details. With that done, I continued adding the certificate using the same workflow as before. And this was actually the final certificate before we move on to the reconciliation stage. Now we found out if everything we've captured actually adds up. Even during the reconciliation, I ran into a few issues, but the way I solved them is definitely worth showing you, because when you come across the same problem, and chances are you will, these fixes could save you a ton of time. From the dashboard, head over to the left-hand menu and scroll down to Reconciliation tab. This is where we pull in SARS official records and compare them to your certificates we've just captured. Start with the Accept Data button. You'll be asked to log into your SARS eFiling profile. If the employer PAYE reference number in EasyFile matches the one in your eFiling database, it will take you directly into the employer reconciliation, also known as the EMP501 return. The EMP501 is split into 4 main sections. 1. Employer information. This is where we are right now, and it includes a subsection for the contact person's details. 2. Tax practitioner's information. 3. Financial particulars, where all the EMP501 totals for the year appear. And finally, the declaration. Let's jump straight to the tax practitioner section, because as a registered tax practitioner, this is where I need to complete my details before moving forward. The financial particulars, where things can go off the rails. Right away, I'm already concerned. The financial particulars bar is showing in red, and when EasyFile gives you red, it means something's off. Let's open it and take a closer look. You'll see 5 columns, and they mirror the monthly EMP501 returns submitted to SARS. Here's the breakdown. Pay-as-you-earn liability. The pay-as-you-earn declared for each month. SDL liability. Your skills development levy figures. 3. UIF liability. That's both employer and employee UIF combined. 4. Total monthly liability. This adds up all 3. Pay-as-you-earn, SDL and UIF. Then 5. Payments. What SARS actually received for each of those months. Each row represents a month, and every number here should tie back to your EMP501 submissions. Let's go through this carefully and figure out what's throwing that red flag. Now we're at the bottom of the financial particular screen, where the total values live. You'll see the rows, the annual totals, based on your monthly EMP501 submissions, and the tax certificate totals, pulled from the certificates you've just captured. At first glance, everything looks promising. The pay-as-you-earn totals match. The SDL totals are also in balance, But then, the UIF totals, they don't agree. According to the EMP501 totals, the UIF amount should be 31,713.34, but the certificate totals show 32,323.56. That's a difference of 610.22, and in reconciliation, that's enough to stop everything. Now here's where your spreadsheet becomes gold. I go back to my master sheet, the one where all the employee data was captured, and double checked. And sure enough, it confirms the UIF total should be 31,713.34. So what does that tell me? It means I made errors when manually capturing the UIF amounts in some of the certificates. And this right here, this is why manually capturing is such a risky business. Small input errors, big reconciliation headaches, and a whole lot of time lost going back and fixing it all. This is also why I prefer importing directly from payroll software like Sage Business Cloud Payroll. It reduces human errors and saves hours. If you would like to see how that works, check out my video where I break down the features of Sage Business Cloud Payroll. But now, back to the task at hand. There's only one way to fix this. Go through each certificate one by one and compare the UIF amounts to the spreadsheet. Let me show you the process. From the Employee Admin section, I click View Employee Certificates. I look for the relevant certificate, in this case 2025-02. Open it. Scroll to Income Received and Deductions. Then open Tax Credits and Employer-Employee Contributions. This section shows the UIF captured, and this particular employee, they match. So I go back and repeat the process. Rather than make you sit through every single one, I'm going to jump ahead to the employees where mistakes were made and show you how I spotted the differences and how I fixed them. Since I'm already in a 2025-02 period, I can open the certificates directly. No need to go through View Employee Certificates. Just like before, I open Income Received and Deductions, navigate to Tax Credits and Employer-Employee Contributions. And there it is, the mistake. I cross-reference with my master spreadsheet and spot the problem. I mistakenly entered the total pay-as-you-earn SDL and UIF 1282.15 instead of just the UIF amount, which should have been 772.10. No wonder the recon was off. To fix it, open Manage Source Codes. Locate code 4141 UIF contribution. Enter the correct UIF value. Click Update Source Code. Confirm with Yes. Then close the window. Much better. The amounts now match the spreadsheet exactly. With that sorted, I save the updated certificate. From here, I return to the employee list and move on to the next fix. Return to the employee list and open the employee's green created certificate. Just like before, open Income Received and Deductions. Scroll down and expand Tax Credits and Employer-Employee Contributions. Then cross-check the UIF amount with my master spreadsheet. And there it is again. Same mistakes as before. I accidentally entered the total of all deductions, 300.50, into the UIF field when the correct UIF only amount should have been 200.33. Time to fix it. Open Manage Source Codes. Search for and select code 4141 UIF contribution. Enter the correct UIF value. Click Update Source Code. Confirm the correction by clicking Yes. Close the source code box. And finally, click Save Certificate. That small difference, it's exactly why double checking against a reliable spreadsheet is so important, especially when capturing manually. Every certificate has been reviewed, the master spreadsheet cross-checked, errors fixed, totals aligned. Now it's time to see if it all paid off. Return to the reconciliation workspace and follow the same process as before. Click Accept Data. Log into eFiling. Navigate to the Financial Particulars page. Scroll down to the bottom and there it is. Every total amount now agrees, including the previously off-balance UIF totals. The annual total payments match the declared liability, and best of all, the due by you amount is 0. That is what success looks like in EasyFile. Head over to the Declarations tab, and there's not much going on here. Now return to the top, click the File button and choose File and Close. With that, the EMP501 reconciliation work page status changes to Ready to File. Submitting to SARS the moment we've worked toward. From the EMP501's reconciliation dashboard, click the Action button, the one with the 3 dots on the right. Among the options, choose Submit to SARS. You'll be prompted to log into SARS eFiling once more. After logging in, EasyFile begins comparing your data with SARS records. And success. The familiar success box appears, confirming that your EMP501 has been submitted successfully. Back in EasyFile under the reconciliation status dashboard, the status has now updated to Submitted to SARS, along with the exact date and time of submission shown just below. That's your official confirmation. This reconciliation is done. Reviewing the Pay-as-you-earn dashboard. Let's confirm the win. Let's take a look at the Pay-as-you-earn dashboard. Just a quick reminder, to view this dashboard, your EasyFile needs to be connected to SARS eFiling. On the dashboard, there's one small red flag, a R900 difference between the EMP501 liabilities and the payments allocated. But this isn't a mistake, it's a known difference that carried through from the mid-year EMP501 reconciliation, and it's already accounted for. The certificates section has no difference. The most important section is the certificates received and payments allocated are in balance. And then I also want to show you the account summary of the period of reconciliation, and it becomes clear when comparing the values of this widget to the EMP501 summary made from the statement of account that the reconciliation is 100% correct, and this is what you want to see. Now look at the certificates section, no differences here. That's what I like to see. Most importantly, the section titled Certificates Received and Payments Allocated is in perfect balance. That's the real confirmation that your reconciliation is solid. And just to bring it full circle, let's open the account summary for the reconciliation period. Comparing this view to the EMP501 spreadsheet summary built from the SARS statement of accounts, it's crystal clear. The reconciliation is 100% correct. This is exactly what you want to see. Totals in agreement. Status submitted. No more red flags. Final approach. Let's land this thing. As we bring this plane in for landing, it's been a long journey. But you're still here, and that means you've made it to the end. And if you're this invested in manually EasyFile capturing, hey, good luck. But just in case you're ready for something faster, cleaner, and way less error prone, I've left a 30-day free trial link to Sage Business Cloud Payroll waiting for you. You'll find it safely tucked in the video description below. This is Munro from the Fun Accountant. Thanks for sticking with this flight all the way to the runway. See you in the next one.
Overlands, I need to live. Overlands, I need to